Retail sales just dropped. What is the market telling us? What's up, super investors? Welcome to the Nick Rutherford Report. And every investor loses money sometimes, but super investors make more than they lose, and they do it by watching the market and moving their money when the market tells them. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Bullish and bearish, we're going to figure it out. Let's get to it. The retail sales have just come in. And if you look at the data right here from census.gov, that retail sales for December is up 0.4% with a 90% confidence according to their data. What does this mean? Well, it means that people are spending 0.4% more than they did before. And this is fantastic news for investors. It's not like a monumental, huge beat, but frankly, if it's flat or up, well, that's pretty bullish for the market. So everyone who's bearish, maybe they're not reading the data, maybe they're not understanding it, maybe they're just trying to take advantage of you. And I get it, there are tremendous risks or potential risks in the future. But I need to invest what the market is telling me right now. And what is the market telling me right now? People are spending more money. And if they're spending more money, guess what? Corporations are going to make more money. This is why the super investor always looks at the data to tell them what to do. So I want to bring up this fancy-dancy chart from the Fed. And if I just look at this chart and pretend that I'm an expert technical analysis person, well, let's look at this chart. What does it look like over here on the upside of the right chart? It looks to me like retail sales have been accelerating. They are certainly 150 million% and not in a downturn. And what this means is it's good news for investors because people are spending more and there's more money. More money means more corporate profits, means stocks goes up. I know I just said that, but it's worth repeating by looking at this chart and taking a long view. So until the data shows me that the spending is slowing down and decelerating and matching a past time when there was an economic crisis, I'm not worried. Of course, the data could come in different tomorrow. We could see different data or whenever there's a next big release. But right now, this kind of data makes me bullish. So I want to zoom over to earnings because earnings are coming out. And if we look under the hood at the data, well, the data is going to tell me what to do. I love the market to tell me what to do because that way I'm not guessing and a super investor looks at the data. United Health, one of the biggest and best insurance companies, no matter what you think about insurance, people are buying insurance and the company's making money. The stock is going up. People are selling the stock and spending their money on things. Well, the estimate was $6.73 a share. And you know what? They just earned $6.80, so up. Bank of America, one of the biggest, most important banks that runs the entire country. I might be overemphasizing that a little bit, but my point is Bank of America, Morgan Stanley, both of them. Well, they both beat on earnings. Bank of America had a 6% surprise. Morgan Stanley had a whopping 30% surprise. So either the analysts are completely clueless or they're underreporting their estimates so that they can have a surprise. But this is a monumental surprise. Heck, doesn't really matter what it is. What really matters is for those super investors paying attention to the data, it tells us that companies are earning more and more money, which means the economy is cooking and cooking. Now, of course, things could change, and I'll change my mind when the data changes, but that's just what I'm looking at. And let me zoom over to look at the market, because the market is the best signal that I can use to determine whether I should be bullish or bearish. Here's Bank of America. It's up 44% this year. Look at this chart. It doesn't take an amazing analyst to understand that we're in an uptrend. Of course, eventually we could be in a sideways trend or a downtrend, but I'm not going to let people on the internet or anyone who's trying to mislead me sway me from just looking at the data and letting the market tell me what to do. And the market is telling me that the biggest companies and the best companies are earning more and more money, and the stock price is going up and up. So that leads me to be very bullish based on all of this data. Now, of course, things could change, so this is constantly on my mind because there are huge risks coming up. We have the new administration coming in. They could change all sorts of things, put on tariffs, swap things around, and make the economy change in ways we can't even imagine. But until we see signs of that starting, well, I'm not going to preemptively freak out just to get clicks to my website or to my YouTube channel. So what does come next? It's very simple. Next, the data could come in bad, and then I'll change my mind on my positioning. Or the data continues to come in flat or positive, slightly positive or wildly positive. And this really gives me two scenarios. See, if the data is good, I have a bullish strategy, and that is buy good companies at good prices that are growing with a durable trend, because that's what's going to build my wealth over time. And every super investor knows this. On the flip side, my bearish strategy is very simple. When the data tells me to be bearish because the economy is slowing down, not because the analysts on Wall Street are telling me to freak out, I'm just going to read the data. And you can read the data along with me by subscribing to this channel and hitting that bell icon so we can look at it together. And then when the data and the market sends me bearish signals, well, I'm going to raise cash. I'm going to be in short-term T-bills. I may even do put options or manage futures because they typically move in a direction that is completely different from the market. So that is going to be my future strategy. But right now I want to zoom into what the market is doing. Let's look at the 500 biggest companies because the market signals can tell me a lot. It looks like we were in a slight correction, but if I look at this right now, it just looks like a routine correction. Of course, it could develop into something much worse, and that's why I'm going to look at the data, but I'm not going to preemptively move my positioning in a way that could cause me to lose money. I'm going to let the data tell me. Could this develop into something more? Of course. But if I look at it here, it looks similar to the correction here back in April of 24. It's not quite as bad as the correction we had in July and August. Will it develop into something more? I don't know right now. But that's okay. I'll lose a little bit of money and then I'll change into my bearish positioning if the data tells me. Otherwise, I'm going to maintain my bullishness because I don't want to be left on the sidelines hoping that there's a crash or hoping that there's a big bull run. I want to watch the data and let the data tell me. So that's what I'm looking at right here. Now I want to look at Bitcoin. It looks like it's consolidating. If the risk of the most riskiest assets, I'm not saying that Bitcoin is, but I'm just saying if they're in a bull run because they're going up, it's very obvious, it's consolidating sideways, well, that tells me that I can still maintain my bullishness until it breaks trend and starts going down. So I want to look at one of the most important drivers, the driver behind NVIDIA, and that's Taiwan Semiconductor, building all of the chips, working on all of the chips because we've got AI, we've got autonomous driving, we've got cell phones, we've got the digital transformation, all of the trends that have been making investors wealthy over the last 5 and 10 years. Guess what? Look at this chart. Does this look like a faltering economy? I get it. There are sections of the economy that are terrible. We're going to stay away from those. But the smart super investor is buying good companies for good prices that have solid, good trends, growing trends that are durable and sustainable. Taiwan Semiconductor has been making more money. It's up. It's leading this charge. So ask yourself, is this bull run really over? This is the update. Hit that like button, subscribe to this channel, leave me a comment. Next, what's the number one stock to buy right now? Click on my bio, follow me, and follow the link to RutherfordWealthReport.com, and I'll share my latest research with you.